While it's tough to pin down an exact percentage, estimates suggest that around 55% of Americans own stocks, according to a 2021 Gallup poll. This includes individual stocks, equity and pension funds, and ownership through mutual funds or various tax-deferred accounts. But when it comes to the global population, the number of individuals who invest in the stock market varies greatly, depending largely on the country's economic development and the accessibility of its financial markets. Emerging economies tend to have a lower percentage of individuals investing in stocks, simply because fewer people in those countries have access to the capital necessary to invest, and the financial instruments might not be as developed or trusted. In contrast, more developed countries often see a higher participation rate due to better financial education, stronger regulatory institutions, and more substantial disposable income among the population. Global market participation is increasing, though, especially as technology breaks down barriers to entry. Smartphone apps and platforms have now made it so that virtually anyone with an internet connection and a few dollars can start dabbling in stocks or cryptos. There's an argument that this has somewhat democratized trading and investment, for better or worse. But let's get down to brass tacks, the global percentage. It's really hard to come up with a solid number because the criteria for trading can be so vague. Are we talking day traders, people with retirement accounts, folks who bought one share of Tesla because they like Elon Musk? The landscape is diverse. However, according to the World Bank, the market capitalization of listed domestic companies as a percentage of GDP in high-income countries was about 126.3% in 2019. This doesn't give us an exact percentage of individuals trading, but it does show significance in economic terms. And while that won't translate directly to individuals, it does show the extensive reach of stock markets in developed economies. In a global sense, then, we could conservatively estimate that a single-digit percentage of the world's population is directly engaged in stock trading or investing, taking into account both developed and emerging economies. This percentage might be increasing with digital access, but still remains far from ubiquitous. Remember, the stock market is just one slice of the financial pie. A lot of folks prefer real estate, commodities, or the good old-fashioned practice of stuffing cash under their mattress. Here in Portland, for example, you've got a lot of people who are really into sustainable and local investing, which might not always reflect in the stock market directly. So, whether you're in bustling Shanghai, sunny Sydney, or my hometown of Portland, investment practices and participation rates are going to differ significantly. What remains constant is the universal truth that where there is opportunity, people will invest, and where there is accessibility, even more people will join the fray.